Guys, welcome back to a brand new video. I'm RexFinance, and in today's video, I'm going to go toe-to-toe with Meet Kevin and explain my viewpoint of why I disagree with a lot of the things he's saying in regards to the stock market and the current market cycle. Now, all of this being said, there is a reason Meet Kevin is a multi-millionaire and I am not. And even though I completely disagree with a lot of the conclusions Meet Kevin has come to, I don't mean any disrespect towards Meet Kevin when I refute his claims in today's video. As a matter of fact, Meet Kevin is somebody that I look up to. He's very successful, he's a very smart man, and he's probably more successful than I will ever be. I also want to make it clear that there is just as likely a chance I am wrong as there is a chance he is wrong. Nobody truly knows what is going to happen in the stock market over the coming year. That's why this is so entertaining as an audience to see this play out. So, that being said, I want to hear from you in the comment section down below. Let me know what you think about Meet Kevin selling out of almost his entire stock market portfolio. I will reply to everybody as long as they are respectful comments. I will not reply to you if you are disrespectful in any way to Meet Kevin or me. Lastly, I know this video is going to draw in a lot of new eyeballs to my YouTube channel, and if you guys are new here or returning and not yet subscribed, I do greatly appreciate when my audience hits that subscribe button. It helps me out tremendously. Without further ado, let's go ahead and get into this video. So just to give some background to this video, Meet Kevin has come out and basically stated that he feels the Fed is going to have to tighten much more than they've communicated to the markets in order to combat inflation in entirety. To back up his thought process, he recently created this video I'm showing on the screen now, basically going through earnings call transcripts from key companies where the management teams stated that the future of the supply chain doesn't look that bright. Basically, supply chain constraints they expect to remain throughout the balance of 2022. The reason he uses this as evidence to back up his thought process is because whenever supply chain constraints start to ease, that is going to be a natural deflationary pressure on the economy, bringing the inflation rate down naturally. But if supply chain constraints persist throughout the rest of the year, obviously we're not going to have that natural deflationary pressure. But I think Meet Kevin is making a big mistake here by relying on management teams' commentary on supply chains. Think about it. Management teams have every incentive to paint a grim picture about their supply chains going into the future because that allows them to set the bar very, very low for their future earnings. So instead of relying on management teams who might be biased in what they're saying, we can look at the cold, hard data of what's going on with supply chains by looking at the ISM Manufacturing PMI or the ISM Manufacturing Prices Paid Index. Basically, what you'll see looking at these graphs is that the ISM Manufacturing PMI peaked in March of last year, and the ISM Manufacturing Prices Paid Index peaked in June of last year. Ever since then, the Prices Paid Index has been falling, meaning the input costs for manufacturers are going down. Basically, this is telling us that any components that are needed from manufacturers are becoming more readily available, leading to a decrease in the prices paid, signaling that the supply chain constraints are easing. This is a leading indicator to look at when you're trying to decipher the supply chain. So if you want to know the truth, I personally believe all of these companies are really sugarcoating their future supply chain constraints because they have every incentive in the world to do so. But when we remove the biased commentary from these management teams, and we look at the cold, hard data, it is very evident that supply chain constraints are easing, albeit slowly. This is actually why I think towards the end of 2022 and going into 2023, the worry is going to be about deflation, not inflation like Meet Kevin is proposing or that the Fed is proposing right now. Because if supply chain constraints continue to ease, all of a sudden we're going to see a rush of supply come in, and if we look at Google Trends, it looks like demand is slowing from consumers. If we look at the iPhone search term is at the lowest point it's been at in 5 years. The same can be said about the Tesla Model 3 search term, with exception to the March 2020 crash. This search term is lower than it has been anytime over the past 5 years, with the exception of the COVID crash. The search term loan is also at a 5-year low right now. And I know you can't draw conclusions exclusively from Google Trends, but if Google Trends do end up being indicative of current demand in the United States economy, this is not good for the inflationary argument, because if that supply comes rushing in from the supply chain constraints easing while demand is also slowing, prices are going to have to fall. And that, my friends, is what you call deflationary pressure. This is exactly why I don't see this inflation running away from us argument playing out. Even if the Fed doesn't up their interest rate hikes or doesn't raise rates more than currently anticipated, because there's going to be so much natural deflationary pressure on this economy that it won't matter. Furthermore, people are forgetting the fact that starting in May of this year, in order to have positive year-over-year inflation, prices are going to have to inflate above the already 5% that they have inflated last year in 2021 for us to get positive inflation numbers year over year. That simply is just not going to happen, especially as we get towards the end of 2022, where we have to top 6% inflation year over year to see positive inflation. Again, another reason I don't see inflation being a big issue towards the end of the year. And in fact, if the Fed over-tightens, that all the more builds my confidence in my thinking that deflation is going to be the issue. But if we think about the Fed raising rates further, and we think about the current situation we're in now, if supply truly does shoot up and demand truly is falling, the Fed simply can't raise rates. They cannot do it, otherwise they will kill the economy. If demand is slowing and supply is roaring higher, you do not want to slow your economy because your economy is already slowing. And I want to be clear about this. I don't necessarily think that prices are going to decrease for consumers, but I sure as heck don't think they're going to keep going up as the year progresses. Sooner or later, as supply chain constraints fade, we will flatline. Prices will flatline for consumers, and inflation will also flatline. I don't expect businesses that have raised prices on consumers due to inflation to lower their prices back down as soon as inflation peaks or levels out. I don't expect that to happen, but I also don't expect it to happen where those prices continue to rise over and over and over again. Anyways, now I want to shift focus to Meet Kevin's Market Cycles video, where he basically explains that he feels we are entering a bear market, which is why he has sold basically all of his stock portfolio. I'm not going to go through and dissect all 35 minutes of Meet Kevin's video in this video I'm making today. I am picking individual points out of his video, which in a way probably isn't fair to him. But for the ease of you guys and to make this video not super long, I'm just going to do that. Kevin basically explains in this video when real estate bottomed in 2011, you knew it was the bottom because no matter who you talked to, people were saying, "Ooh, you're in real estate? That sucks, man. That's a tough market." But this point by Kevin just kind of baffles me. He argues that we're at the top of a market cycle, but during this video he basically explains that the bottom of the cycle when you should be buying is when people are saying, "Ooh, that sucks, you're in real estate?" Well, guess what? I don't know about you guys, but I've had my girlfriend's brother, I've had my aunt and uncle, I've had so many different people in my life, one of my friends' dads even, say, "Oh, you're still in the stock market? Tough market, man." So in my opinion, it's kind of confusing when Meet Kevin tries to use this as evidence to explain why we're at a market top. But during his video, he explains that whenever this is happening, it generally signals you're at the bottom of a market. The next point that Meet Kevin makes in this video that just baffles me is he points out a couple of times in history where if you bought the S&P 500, you would have to wait a decade or longer to recover your original investment. Obviously, this is factual. That's history. I can't dispute that fact. But Meet Kevin is completely ignoring something that he has constantly preached himself to his investors that follow him. Dollar cost averaging. He doesn't take into consideration that investors likely, if they were buying at this point in time in history, they were also buying as stocks fell. Dollar cost averaging in. Something that he preaches himself to his viewers. He completely ignores that. He also completely ignores current valuations for a lot of stocks in the stock market. Large caps right now, sure, I will agree with Meet Kevin. They are vastly overvalued according to history. The top graph here shows that. Forward PE ratios are higher than they've been since the tech bubble. But you can see just over the past month, we've already made a lot of progress with these valuations falling back down. But when you look at mid caps or small caps, which are the middle graph and the bottom graph, you can see that historically, we're at very fair valuations, if not undervalued valuations for these companies. He completely ignores the current valuations. And if he's trying to use this as evidence as to why you shouldn't be buying into the market at the current point in time, I'm just extremely confused because valuations for over half of publicly traded stocks are very fair right now. Well over half of publicly traded companies have fallen 50% or more from their highs. Do you really think that stocks at this point in time are going to fall even more from here to a point where they won't recover for at least a decade? It's common sense that basically everything has been correcting in the stock market for a year now outside of the biggest companies in the world, outside of those biggest publicly traded stocks. Those are the only companies that are propping up the markets. So I can see where he's coming from when he says that things are overvalued. But you need to dig beneath the top layer of the onion, beneath just the handful of companies right now that are extremely overvalued according to history. There are hundreds and hundreds of stocks that are at 52-week lows. And in my opinion, just because there's a handful of stocks in the stock market that are overvalued, that does not mean you should bet against the entire stock market. Because, again, I've already covered this, the vast majority of stocks are undervalued right now compared to history. Later in his video, Meet Kevin goes back to describing what a market bottom should look like, where people say sell, 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 until eventually investors start saying, this is madness, I can't take this anymore, goodbye, I'm leaving. This point perhaps baffles me even more than the previous points Meet Kevin made in this video. If we look back, how many investors have lost interest in the stock market over the past year? How many investors have said, this is madness, I can't take it, I'm leaving, I'm out the door? How many? You can look at Google Trends, you can look at YouTube viewership in the stock market space. Interest in the stock market is down. People have said goodbye. And if you're trying to explain that this is when a market bottom hits, then according to you, we're at a market bottom right now. Kevin basically closes out that video by explaining that whenever the Fed tightens fiscal policy, when the stock markets are in euphoria, it results in the stock market falling. I could agree with him. But Kevin, can you point to any time in history over the past 50 years where going into interest rate hikes, the market was in an exuberant phase? I personally could not find one. And going back to the 1980s, every single time where interest rates were hiked, the stock market also went up. So personally, I cannot find a single time in history where the stock market has been exuberant going into interest rate hikes. And this is because of something you preach as well to your investors. You preach that things get priced in the stock market. Guess what? The market generally has a good idea way ahead of time when interest rates are supposedly going to take place, and things get priced in. Stocks being 60, 70, 80, 90% off of their all-time highs, I don't think there's any other sign you need to see that the market has priced in these interest rate hikes, because the higher growth a company is, the more it's been hit by the markets. This is priced in. So Kevin, if you're watching this video, I just want to know, have you dug beneath the first layer of the onion and seen the vast majority of stocks that have been hurting for 6 months to a year at this point? Have you seen the current valuations in the stock market outside of the top handful of companies? And lastly, please answer to me, what exactly are you seeing right now that tells you the stock market is exuberant right now going into interest rates being raised? But I'm going to leave this video here. If you guys enjoyed this video, please hit that like button down below. Again, don't forget to comment your thoughts on Meet Kevin selling out of his entire portfolio. During this video, I didn't mean any disrespect to Meet Kevin, and I will reply to everybody that leaves a comment down below as long as it's not disrespectful to me or Meet Kevin, because there's just no room for any disrespect on this channel, in this community. With that, I hope you have a great rest of your day. I'll be back with a brand new video later this week. Peace out.